What is going on, investors? Hopefully, guys are doing well out there. At this point, it is Friday night, and it is time for the FANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FANG stocks. And today, I've been laying in bed, trying to recover, trying to get healthy enough to bring you all of the news, so we better not waste any more time. Kick things off with Meta. Start of the week at $4.56. This stock, like all these stocks, showing huge resilience, up over 4% to finish the week at $4.76. TikTok is suing the United States government over a law enforcing its sale or ban. As you recall, I believe just a couple of weeks ago, the president signed a law saying that TikTok has 270 days to either shut it down here in the United States or sell off the company. And TikTok lawyers are going to argue that silencing the 170 million Americans who use the platform to communicate in ways that cannot be replicated elsewhere. We'll see which way the court decides here. Look, I'm not an attorney, certainly can't pretend to be one, but the ones that I've heard provide an opinion on this one say that TikTok's got an uphill battle to climb. Moving on to Apple, start of the week at 183, finishing flat right at 183. This is in context of the company's $110 billion buyback that is larger than 418 of the 500 stocks. And oftentimes when we're covering, especially Microsoft and Apple and Amazon, Meta even, these multi-$100 billion companies, we don't realize how big $110 billion is, but that just gives you some context. Now, the company unveiled new iPads, iPad Pros, iPad Airs. The iPad Pro had the M4 chip on it. I think the most interesting new iPad was they have a new 13-inch iPad Air, which gives you the larger screen. I've always preferred the iPad Pro with the 13-inch screen. That's been the device I've always bought. And now you have an iPad Air with a 13-inch screen. Doesn't have the M4 chip, or at least not standard, but I think whatever chip, I think it maybe has M2 chip. That is plenty capable for most people's needs. App Store revenue grew 10% in quarter number 3, even as the company's device sales continue to slump and downloads as well. Moving on to Amazon, start of the week at 185, up about 1%. Very resilient technically, up to $187 per share. Amazon is planning to invest in nearly $9 billion to boost its cloud infrastructure in Singapore. I think what these companies are seeing, and we've been seeing these massive investments, the cloud infrastructure, at least from a traditional cloud, not AI cloud, but traditional cloud, is more or less fully built out or doesn't need these huge investments, but you go into these emerging markets and you need big ones. Amazon is introducing its first fleet of electric trucks. These will be powered not by Tesla, but actually by Volvo. So it'll be interesting to see if those are rolling around on the streets. Moving on to Netflix, start of the week at $5.85, up 4.5%. All the way up to $610 per share. This is after Disney announced pretty much disastrous earnings. Now Netflix and Spotify remain favorites among teens, but Prime is catching up, which I thought was interesting because most teenagers are going to be bumming off their parents for their Prime subscription, since I don't know a lot of teenagers with an Amazon Prime subscription or even a need for one. So that is interesting that Prime is penetrating teens, obviously through a parent's accounts. And I know that Mr. Beast, who is very popular, needless to say, here on YouTube, he's got a show coming to Amazon Prime, and I'm going to watch it. Now, Warner Brothers Discovery, ticker symbol WBD, reported their earnings. I mean, we're talking about an $8 stock, $19 billion valuation, revenue coming in at nearly $10 billion. That was a 7% decline year over year, and this is why Netflix looks so impressive whenever they report their earnings. Look at your revenues over at Warner Brothers, $10.7 billion down to basically 10. The problem is look at your total cost and expenses from 11.3 down a little bit to 10.3, but your operating loss came in at 267. Last year it was 557. Here's the problem too. Look at your interest expense. You think some of these companies are waiting for Jerome Powell to drop those interest rates? You spent $515 million just servicing your debt. So you turn a $267 million operating loss into a $955 million loss. Again, most of that has to do with interest expense. And so this is why rate cuts are so important in the stock market, not only to a stock like WBD, but you can look across the entire sector of the stock market. You start getting rate cuts, well, all of a sudden, this number goes lower. And when that number goes lower, that EPS line goes higher, and that is more or less what you're valuing these stocks on. Now, Sony and Apollo is planning to sell CBS and the cable channels like MTV and Nickelodeon when and if they buy Paramount Group, which is another publicly traded stock, right in that $9 billion valuation. Now, this thing must not be respected by Wall Street or nobody cares because they have a $26 billion offer. They're going to bring Apollo in, which is more or less a private equity group, maybe kind of a leverage buyout of this, sell off the pieces that you don't want. It is said that potentially Warner Brothers Discovery, which we just went over here, could be potentially interested in the CBS assets, maybe even MTV and Nickelodeon. That'll be interesting who ends up with those assets. Could a big tech player make a play for that? Moving on to NVIDIA, start of the week in 908, down about 1% as we are about a week and a half, about 12 days from NVIDIA reporting their earnings, shares trading just under $900 per share. This is after Taiwan Semiconductor, boom, April sales soared 60% year over year. And even when you look sequentially month over month, up nearly 21%. This is incredibly bullish, not just really for NVIDIA. Obviously, we saw this week, NVIDIA shares didn't really benefit too much, but this is really big news, I think, for AMD, certainly Intel, other chip makers as well as TSM, obviously doing a lot in the AI space. But when you see their sales soar 60%, makes me to believe PC shipments are incredibly strong. Maybe you have a slight recovery in smartphone. I think for sure you have some price increases that were passed through, and obviously some of it is related to AI. Moving on to Google, start of the week at 167, basically flat, finished the week at 168. Now, Google is busting out a sales team to push out AI-related products. They're going to be pushing out and marketing Gemini, trying to get people to use it, license it, and all of those types of things. But a lot of competition coming because OpenAI is potentially going to unveil a Google search rival next week where you can use inside of ChatGPT basically a search engine that will display results and cite results and post links very similar to Google. As somebody that buys a lot of online ads, PPC ads, I'd be interested in buying ads on that. Moving on to Microsoft, start of the week at 408, drifting higher, up over 1.5% to finish the week at 414. Now, Microsoft is working on a new large AI model to compete with Google and, interestingly enough, OpenAI as well. So Microsoft making obviously a large investment into OpenAI, pinning a lot of the company's AI products really more or less to OpenAI. But they're not sitting on their laurels. They are going to build their own large language models to potentially compete with OpenAI as well. Very interesting. Now, amid lawsuits and criticism, OpenAI is going to build a tool to let content creators manage its use. So maybe opt out of your content being able to train on a large language model. My guess is pretty soon, and it probably already exists to a certain degree, there are ways to not allow the Google bot, or at least tell the Google bot, not to scrape certain web pages. I think we're going to have an HTML code set where you're going to be able to tell the AI scrapers not to scrape. This is copyrighted content. This isn't content that we're going to allow you to scrape. But at the same time, I think what will be wise and will come down the pike at some point is OpenAI will just be buying content off of you. And so I think it'll end up opening the world for content creators. And instead of always relying on ads like this YouTube video or affiliate programs, this will open up a new revenue source where I can create content and I can say, yes, OpenAI, you can use this, and OpenAI will pay me for that. Moving on to Tesla, start of the week at 186. What happened? Tesla now down over 9.7% just this week alone. back to 168. You want to see that technically. Now, there should be some high drama around Tesla's shareholder meeting next month. Tesla and drama goes hand in hand. The drama centers a little bit around Elon Musk's control of the company. He has about 20% of the company. That includes options for that 2018 award, which I think was struck down in a Delaware court. He's looking to acquire about 25% voting control in Tesla. And honestly, I think shareholders will give it to him, and they probably should. Now, here's something right out of the Donald Trump playbook, but it's President Joe Biden set to announce 100% tariffs on China EVs. So you are not going to see BYD, XPeng, or NIO, or Li Auto, or any Chinese EV maker anytime soon here in the United States, unless you want some weird and odd flex that you have one of these cars here in the United States, because 100% tariffs on a product. EVs are not flying off the shelf, and now you have to have 100% markup just on the tariff side. This is straight out of the populist Make America Great Again playbook. And actually, if you dig in to not a lot of things, but particularly as it relates to China, Joe Biden is exactly like Trump, and maybe actually even harder on China than even Trump was. Now, Tesla is in talks to build up its full self-driving upgrade as they continue to eliminate jobs. So I think you had a software update for full self-driving version 12.4. Again, I have been testing the most recent release, and again, it works. Full self-driving works. It's a beautiful piece of software. Would I sit in the back of my Tesla all by myself and let the car drive for me? Not really, because I actually care about my life. Would I put my kids back there and let the Tesla go off on its merry way? Absolutely not. Now, Tesla's Germany factory has been under fire, if you will. I think there was even an arson attack on the plant, I think maybe just a couple of weeks ago. And now they face another plant shutdown as you have protest against Tesla and activists scheduling a rally in front of factory gate. I tell you what, there's been a lot of protests and rally. Like, does anybody have a job? Does anybody have a family that you have to provide for? Like, can you just go protest about just about anything these days? Obviously, you're more than welcome to do that, but these people must have more money and a hell of a lot more free time than I do. Now, Elon Musk called on Warren Buffett to take a stake in Tesla, and I'm doing the same thing right now. Can Warren Buffett take a stake in the investor channel? And if he does, I might retire. Now, moving over to the technical segment of the show. I did not expect this. We did technically break trend, at least on kind of a breakneck uptrend that we were on, but here we are popping out of it. Now, it doesn't really mean a whole lot. It looks like to me we're going to want to retest the top of this channel. Where you draw this top green line in, more or less up to you. Probably make a new higher high on the S&P 500. If you're out of these markets or you want to deploy more capital into it, don't worry. I don't think there's any reason to have FOMO or a fear that you're not going to have better opportunities coming soon in the stock market. I think you make a new low that was below the 49.80 level that we made back in, I guess this is April of last month. Think you make a new lower low somewhere in the middle of the channel. That's why we always divide these channels in half. That's your time. That's your time to move. Now, moving on to Meta, this one powering up. Didn't quite close the gap. Everybody looks at the same chart sometimes, and people step in because they don't want to miss out. Now, what we have seen, and we don't always point this out, very strong rally with Meta, but look at it. It's on declining volume. In fact, rapidly declining volume. So this is what you would call maybe not really a strong rally. Typically, what you want to see is when stocks make this type of move, at least in the shorter term, it's at least on average volume or ascending volume. In this case, it's declining. That's why I wouldn't chase this rally. Sure, could Meta walk its way back up to all-time highs, make a new higher high in the coming days? Yeah, you'd make $70 an upside, but I think you come down here, you retest areas lower. That's your opportunity to move. Now, Apple, big reversal, obviously, on their dividend and their buyback plans, created a gap in the chart, but we're basically sideways consolidated on this one. From 166 to 195, even with the buyback and all those types of things. The other fundamentals, I don't really see anything right now that makes me to believe Apple's able to power back up into the 205 minus some kind of AI product that we just don't know of yet. Otherwise, you get opportunities to buy this one lower. You probably should step in. Now, speaking of buying the dip, Amazon's chart is as pure and as beautiful as you get. This is why we love these channels. This one has been channeling higher. You really shouldn't wait till it gets to the bottom of the channel. You've literally spent maybe 4 days over the last year and a half at that level. It's the middle of the channel where you want to move. You're just slightly above it. You've just confirmed a new higher high. You pulled down to like 180 on this one, and you're pulling the trigger. Netflix, so resilient, was in a channel, busted out, back tested to the top of the channel, and here we are popping up. This one looks like it wants to make a new high. This is one of the most resilient stocks out of all of them, and it is shocking. Now, moving on to NVIDIA, kind of range bound. We haven't been able to get above 950 on NVIDIA or 960, but we might have our opportunity in 12 days. There is nothing, absolutely nothing that says this company won't absolutely blow it out of the park on earnings days. If they miss, which I don't think is even possible, it's like Michael Jordan missing like a last second shot in a big game. It just is unfathomable. If they miss, this thing is going to get destroyed, but I don't think that's in the cards. I think any weakness in this one, you are buying that one. Also with Google, just made a new higher high, hanging out at this level. If you buy at these levels, I'd probably do it lightly, only because we could come back down here, retest the top of the channel at 150. That'd be an area where I'd be a little more aggressive. Microsoft looking very Amazon-like in a beautiful trend. And look where we're at, folks. We're not at the middle of the channel. We're at a point of the channel that you've only spent maybe a couple weeks over the last year. This is your moment. This is a moment to buy Microsoft. If you're a conservative investor, you don't want your money to get dusted off. Stop loss at 386 with upside from 414, new high. I can't even see it on the chart. You'd be all the way up here at like 470. $60 in upside, $30 in downside. Doesn't get much better than that, at least for a blue chip stock. Now, here's also your time to go with Tesla. Over the last 4 years, your time to go is in the green box, and we've had this green box in Tesla forever, beginning at 165. If you have bought Tesla in the 165 range or lower, while you're not sitting on a profit today, you're not like the people that accumulate these shares $300, $400 per share. This is your time to move with Tesla. Just understand, though, you are in a downtrend. What you want to see is this is a reversal, that this is a new low. And again, we're guessing here. There's nothing technically that says Tesla's going to do nothing but dump out the bottom. Honestly, that is the high probability. But to give you guys kind of the bull case, this was the low, just like these were previous lows in downtrends, and we are going to reverse at this level sometime soon, make a new high, maybe back up into the 208. Ideally, you need to get back up into 260. That would cancel out the downtrend you're in, and you are scooting because you'd be buying this one in the 160s and be sitting on massive profits, even if this downtrend continues, but we come back here and retest the $200 level. I would peel some shares off of Tesla, take some profits, because like we said, over the last 4 years, this stock has gone nowhere. So if you're able to shave some profits some way or another, that is a good thing. Folks, that was Fang Stock Recap Show for Friday, May 10th. I'm going to go drink a bunch of water, rest this weekend, and we'll be back next week for another full week of earnings video. Thank you for your support. Have a safe and fun weekend, and good luck with your investments.